Welcome to the Money Savvy Parents Podcast, the podcast for parents to gain financial education to then pass on through the generations. I am your host, Laura, mother to 3 beautiful children and founder of a financial coaching business, Savvy Peacocks. Let's remove the taboo from money together. Hello everybody, welcome back to my podcast. Great to have you with me today. We are going to be taking a question that I particularly enjoy actually, this part of finance, but I know a lot of people feel uncomfortable about it. So let's delve straight in and listen to that question.
After listening to your podcast, I'd really like to review my expenditure and try and get it down. Can you share your thoughts on the best way to approach this? Thank you.
Thank you so much for bringing this up because, as I've just said, negotiating and reviewing the numbers, sadly, as a self-confessed penny obsessor, I can tell you is one of my favourite things to do. And actually, now I've mentioned it, go back to the 5 money languages and just remember your relationship with money, how you like to approach money, because this probably wouldn't be a problem for penny obsessors. They're used to knowing where all their money's going and keeping a close eye on it. But if you're an ostrich where you don't look, you don't want to look, or maybe you're a money maker and you're focused really heavily on your income, then this might be something you need to really focus in on and push yourself to work hard on, because if you don't stay close to your expenditure, then potentially you could have some money leaking out of your account. It could be going out of your account. You didn't even realise it was going out. And at this point, I just want to share, especially with things like direct debits, because this is where items can go up in cost without you realising. Because with direct debits, the company that you're paying is in charge of the amount of money that they take. So yes, they need your permission, but let's say you missed the email or you miss the letter, and sometimes these things can sneak up without you realizing. So it's really important that you do home in your inner penny obsessor and review your expenditure on a monthly basis. And this question, funny enough, actually came up to me recently with a client because they approached me to book in to have some time, just 1 hour with me, which is part of my services, like my entry-level services, a power hour, where you can come along with a particular topic. And this person came to me and said, I'd really like to go through my expenditure, identify where I could save some money, get a plan, have a look and see what other things are cheaper out there and how to approach it. So we use the power hour to really work together and go through their outgoings. So let me explain to you the process that we went through, and you can see how this works for you in your personal circumstances. So for each item that you've got going out of your account, you need to question yourself, are you still using it? Particularly for items such as subscriptions. Have you had your value from that item that month? How many times have you used it in that past month? Is it still necessary? So really question absolutely everything that's going out of your accounts. Now, I've mentioned there about direct debits, but don't forget things that automatically go onto your credit card or your debit card on a monthly basis won't show as a direct debit. They'll show as a payment going out by card. So have a look at all the items that have gone out of your bank account in the last month. And then particularly for your bills and your direct debits, be really clear on your expiry dates, when the deals are expiring, particularly things like telephone contracts, broadband, TV providers, because some of these contracts you can actually break early, particularly if they're expiring in the next 6 months or so. So keeping really tight on that date is really worthwhile doing. But I would say it's also worth having a conversation with these providers for service like this, especially if you're nearing the end of the contract, because it might be that you don't use all elements of the package and therefore you can tailor the package down, or maybe that you can actually negotiate the price down at that stage and without changing any of the level of service. But if you don't need to change the package, then I would still encourage you to look at what other providers are out there, what they're offering you, as an alternative before making that phone call. Because then you can say to them, okay, well, I'm paying this much with you, but I'm actually, when it expires in 6 months' time, I'm going to move over to such and such. This is how much I can get it to. Do you do a price match? Asking yourself, have you still got the best deal possible? Because just because you signed up for it 9 months ago, 6 months ago, doesn't mean that it's still the best price available. So can you get it elsewhere? And if that's the case, then, use that as your bargaining tool when you phone up. I just want to talk now about insurances, because it's the one thing that most people do not realise, that actually your insurances, things like car insurance, home insurance, are actually really easy to review before the renewal date. So a lot of people think you've got to wait for the renewal date to come up before you can get out of your car or home insurance. Obviously, every company is different. There may well be like a 30-day cancellation period or something like that. But if you work out the figures and it turns out you can save it and get your insurance for half the price for the same package, just be clear on what you're getting to make sure you get like for like cover. But because you signed up for that a year ago doesn't mean that that's still going to be the best deal on the market. So that's the first thing I want to say that to you. And the second thing is, a lot of people automatically just renew their car insurance and their home insurance, and actually you've obviously got to put a time on going and having a looking and seeing what's the best deal available. But just be careful, because if you just automatically renew your contract just because it's easier, you've always been with them, you're pretty comfortable with the price, you could still be wasting or leaking money there. So just be conscious that, first of all, you can change things before the renewal date. But if you get to the renewal date, then just take a little bit of time. It doesn't have to take forever, particularly if you're going to work with someone else at the same time. For me, this was an hour was enough to go through the client's incomings and outgoings. So, take the time to just double check, is this the best deal available to you? And then the other thing with insurances, I would just say, is that when there's a change in circumstances, maybe a new car, or you don't need the insurance protection for part of it anymore, maybe you've sold part of an item that was heavily covered on your home insurance, then that is a golden opportunity for you to review these options. So just keep really tight to, have my circumstances change? Do I need to look at reviewing things differently? And I'll give you a personal example actually with my car insurance. I pay my car insurance annually. And my circumstances changed because I think most of you have probably heard me talk. If you've been following me on social media, you will have heard me talk that I broke my ankle. I was told that it was a quite severe break and I was unlikely to drive for 6 months. So I contacted the car insurance people and said, look, I'm not going to be doing 10,000 miles a year now because I'm not going to be commuting to work. I'm not going to be able to drive for at least 6 months. And even when I finish work, I'll be working from home, so I'll be using the car far less. So actually I didn't need to have that mileage on there anymore, didn't need to have the commuting cost on there anymore, and it reduced the insurance. So although I'd paid for it annually, they gave me a refund for that annual insurance, or that element of that annual insurance. So that's an example of where your situations can change. Even if it's something slight, it's just worth having that opportunity to review things. So moving on to some of the bigger expenses, such as mortgages and personal loans. Now, just because you have fixed in for a certain period of time doesn't mean that that's going to be the best deal available for the whole period of time. So I can give you 2 examples here. Firstly, mortgage. So I had an example when I first bought this property. I signed up for a 5-year mortgage deal. And for most people, I would think, okay, well, I've committed to that 5 years, I'm going to stick with it. But as I had the financial education, obviously working in the bank, I knew that if I keep my ear close to the ground, if a better deal comes up and it makes sense to make the switch and break the contract, then I will. And lo and behold, what happened is after 3 years, so a sizable amount of time that I'd committed to that contract, a better deal came along. And even though there'd be fees to come out of that contract, I was going to be saving £500 a month by switching my mortgage. So of course, weighing up the amount I was going to save versus the amount of fees that I'd have to pay, it was well worth making that switch. Whereas I think all too often people would be caught up in thinking, okay, I've signed up for 5 years, that's what I'm going to stick with. And of course you can, but in that instance, I would have missed out on £500 a month. And of course, that is just caveated with, that extreme example was when the interest rates just dramatically dropped, sort of 10, 12 years ago. So I'm using that example. It's not always going to be that sizable, but I wanted to just show you that you don't always have to commit to that time period. And then the second example I want to give with personal loans is that you tend to commit to paying a personal loan over maybe, typical would be 3, 4, 5 years, but you can do some of them up to 8 years. And in that time, I would hope, certainly if you're listening to this podcast, that your credit scoring might go up. And for those of you that don't know, your interest rate on your personal loan is often directly correlated to your credit score. So if you've committed to a 5-year personal loan, for example, you're working on your credit score, and in those first 3 years, you double your credit score, which you could do, and or even if you just moved up like 150 or 100 points would make a big difference on the interest rate that you're going to be charged for your personal loan. So there is no reason why you can't go back. You can go back to that same provider, or you can look at what else is on the market and see, okay, because of my credit scoring is this much now, what would be the interest rate available to me? So I would say with these bigger things, be looking at them on a 2-3 years max, looking at them on a regular basis around how much longer have you got in the term? What have you got left to pay? Can you get it cheaper elsewhere? How do you break out of it? What would be the difference to me monthly, etc. So I hope that's really got your thoughts going, because mortgages and personal loans, those longer term commitments are often the things that we miss out on having the opportunity to save some money. So in summary, stay close to your numbers, watch for any sneaky rises or items that you don't use so much anymore, and make sure that you take the time to do your research on the best option available, and then ask the question about changing the price. What's the worst that can happen? Like, the worst they can say is no. Okay, fine. In 6 months' time, I'll move over to another provider. This really is best done with 2 people, because if you can do it together, then one can have a look at what's going on, the other can check what the options available, and you can search together for the best alternative deal. You can really sort of challenge each other and having a look at, am I comfortable with paying this much for that service? How much do we actually use that? And if you can't do this with your partner, or maybe you're struggling to carve out some time with your partner, then feel free to book in my diary in the Power Hour, and I can promise you won't regret it, because this is one of my favourite topics. I love really challenging how much we're spending on things, how much we use those items, and then ultimately getting the best price for them. So feel free to book in my diary. You can do that through my website, which is savvypeacocks.co.uk, and you can just go into services and book now, and that will book you straight into my diary. I hope that has helped you and got your thoughts going around your own expenditure. Please come back to me and let me know. Give me some feedback. I'd love to hear those success stories. And I look forward to having you with me next week on the podcast. Have a great day. Thank you so much for listening to Money Savvy Parents. If you enjoyed today's episode, then please subscribe and post your money questions within a review for future episodes. If you want to learn more, then please join my Money Savvy Parents Facebook group or club on Clubhouse. Let's remove the taboo from money together.